you all know, I've been cautious on our markets and Tesla in recent days and weeks. Not because I think Tesla needs to go lower or necessarily that it's going to go lower as a Tesla specific stock, but that the markets usually struggle in September. If the economic data gets worse, well, that's obviously going to be problematic. Now, I do think the economic data is working with a lag, and I think that is more obvious today than it has been in even the past couple of weeks. So I'm starting to see a plausible path towards a near-term rally for Tesla stock, and I want to explain exactly why that is, what I could see occurring from now until October 10th or so. That's the robotaxi event for Tesla. But still what to be on the lookout for, because the only thing that really matters right now is the Fed and the state of the economy. The last couple of days we've had CPI data that has come out, inflation data, PPI today. None of this was ever going to be a catalyst for markets. I've said this for weeks now. CPI is no longer an event for markets, as long as it comes in line with expectations. As long as it doesn't come in too high or too low would signal economic weakness, would signal companies are having a hard time passing on costs to consumers at all. They're lowering prices. That's really bad for the business cycle. That's really bad for the economy. If we ever get to deflation, markets are not going to like that. Okay, that's the bottom line. If inflation starts to go higher, markets are not going to like that. But anything in between, the most likely scenarios, really are not going to affect the markets. And we've seen that yet again today with PPI. PPI is not what affected markets at all. Now, Tesla stock did have a good day today. The Russell 2000 had a very good day today. But also, your quality dividend paying companies also had a great day today, like a CVS or a Dollar General or others. And that's really just because the markets are gearing up for the first Fed rate cut. Now, coming out tomorrow, we are going to get Michigan consumer sentiment. Expecting sentiment will pick up a little bit, but what's really important here is current conditions that have been falling recently. You want to see that move upwards. We're expecting it will slightly from last month, but any downside surprise there will be negative. As well as that, consumer expectations, we are expecting that will actually fall a little bit, so get worse from last month, but if we see a big down move, that would be problematic. Vice versa, if we see current conditions, get better and consumer expectations get better, that likely is going to lead to a pretty good market tomorrow. Now, from really this point, over the next 3, 6, 12 months, it's all about the economy. Again, inflation's not the catalyst. It's all about the economy. To some degree as well, it's about global economies like China. How bad does China get? Does that lead to a problem in the US? Does that slow things down over here as well? It's far too soon to know that. We get some data coming out tomorrow night with industrial production, retail sales, fixed asset investment, and the unemployment rate out of China. That data comes out at about 10 p.m. tomorrow night. So markets are going to be closed. Futures are going to be closed. We'll kind of react to that, coming on Monday if it's something worth reacting to. But we do actually have a big catalyst. Nothing on Monday. Okay, you do have New York Empire State Manufacturing Index, but nothing really on Monday. Tuesday, you get retail sales. I think retail sales, besides GDP data that comes out quarterly, so we don't get that too often. Besides that, retail sales is the number one most important catalyst for markets right now. Last month, we came in at 1% positive. That's kind of what saved markets last month, okay, in August. We're expecting 0.2%. Now, this is a month-over-month reading, so a positive number coming off of a 1% reading for last month would be good either way. If we go negative, that's where you have a bigger problem. Now, the bigger the fall, the bigger the problem, okay? The bigger the negative reaction in markets that could be. But what will really be important is because this is on Tuesday, The Fed's cutting rates the next day. It could sway the odds a bit for 50 basis points versus 25 basis points. Currently, there's 22% odds of 50 basis points and 78% chance of 25 basis points. If retail sales theoretically comes in bad, markets are probably going to sell off on that, clearly. But the odds of 50 basis points are going to jump a lot. Now, that might not be a good thing, though, because historically, since 1995 at least, until today, the last 30 years or so, you have seen 1, 2, 3, 4, 5 easing cycles from the Fed. 3 of them, the Fed started with an initial 25 basis point cut. And all 3 of those initial 25 basis point cutting cycles had positive returns. 1 year, 2 years, and 3 years later. Only 1998 had a negative return 3 years later. But in all instances, 5 years later, you were up on markets. Now, 1 year later, after 25 basis point cut in 2019, you were up 13%. In 1998, 1 year later, you were up 22.5%. And in 1995, after your 25 basis point cut, you were up 21.5%. Great. In 2001, after the Fed started with a 50 basis point cut, you were down 12.4% 1 year later. 2 years later, you were down 30.6%. In 2007, after your 50 basis point cut, you were down 18.9% 1 year later, and 2 years later, you were down 26.3%. So historically, when the Fed starts with 50 basis points, it's usually not good. Over the next year, 2, 3, 4 years. Even 4 years later in 2001 and 2007, 4 years post, first 50 basis point rate cut, you were still negative, almost 5% here and negative almost 13% for 2007. So there is a very negative connotation associated with 50 basis points. Now, it's clear the Fed is behind the curve, so history doesn't always repeat itself, but it usually does rhyme. You guys have heard that before. And I don't think 50 basis points would be positive. I think 25 basis points could be positive as long as the Fed's dot plot coming out on Wednesday does not signal more economic weakness, does not signal a weakening economy. Now, I have to be honest, when you see rallies like this, though, in markets, it feels like a blow off top kind of almost like short squeeze rally. Since the inception of the S&P 500 in 1993, there have only been 9 other occurrences when the index was down at least 1.5% at the lows and finished up at least 1%. That happened yesterday. And the last time this happened was the day after the bear market low in October of 2022. And then markets were off to the races after that. So you did see a lot of, I think you'd call fear yesterday. A lot of it was just in big tech that got reversed. And it was really NVIDIA that led the markets higher, okay? That's what I think is a little bit different from 2022 until today in that regard. NVIDIA was up 8% yesterday. That in and of itself caused almost a 1% rally in the S&P, okay? Is that really like super strong of a market? Is that telling us a whole lot? I don't know. And the 5 words that caused that rally was NVIDIA's CEO that says, quote, "Demand for chips is great." That's all Jensen Huang said. And it was off to the races for NVIDIA and off to the races for our market. So that's that in and of itself. When markets go and hit a low, down big, 1.5% or more on any given day, and end up closing positive over 1%, that tends to be mega bullish in, the next coming months. The question this time is, with the first Fed, easing cycle since 2019, since 2020, is do markets sell the first cut or do we buy the first cut? I think if we want to bottom line, this comes down to 25 or 50 basis points. 50 basis points, we're probably going to sell the event, okay? 25 basis points, I think, can be viewed as more positive. Now, I think there's also a huge disparity here. Small caps, cyclicals, value, high-paying dividend stocks, something like a Tesla, is going to do very well in a Fed cutting cycle without a recession. Big tech, not so much. Big tech is your recession trade. Big tech is where you'd want to be during a recession, in other words. And big tech does not benefit from the Fed lowering rates. So when big tech controls the market weighting in the S&P and the NASDAQ, like whatever NVIDIA does is basically what the indexes do, okay? When you have a market like that and big tech does not stand to benefit from rates going lower, they actually stand to, lose when rates go lower. How bullish can you really be on the S&P 500? Even if the rest of the S&P was rallying and big tech sold off, you'd still have a negative day for the S&P 500. But I do think it's possible we could see quite an aggressive rally for Tesla, value, cyclicals, small caps, generally speaking, over the next couple of weeks, as long as retail sales do not come in bad. Because the main focus right now is, did the Fed wait too long? Are we going into a recession? Imagine if we get a good retail sales number on Tuesday. The Fed gives us a dovish 25 basis point cut. They don't signal any kind of recession that's coming. It's just, hey, we're starting to cut to get back to neutral because we can, because inflation's fallen a lot. I could imagine that scenario being very, very bullish for Tesla. Tesla stock on a technical basis seems to be reflecting that. The stock is above its 50-day moving average at $230 per share, a critical level, by the way. Looks to be in a short-term cup and handle formation that's fully formed at this point. We just need that breakout to the upside. I mean, from that perspective, there could be a lot to like about Tesla in the very near term. Whether or not we end up falling, back under $200 per share or end up, going through a crash depends on the state of the economy and whether or not that gets worse. I think it will get worse towards the end of this year. I think winter could be rough. I think Q1, Q2 of 2025 at some point could be rough. But in the very near term, I think there's more positives going for Tesla than not. Of course, there is election uncertainty, and I expect there might be more downside based on that, especially in October. But really, here revolving around the first Fed cut from now until, some point in October, it wouldn't surprise me if Tesla and certain areas of our markets did do well. It really comes down to retail sales. And if retail sales come out well next week, get a dovish cut from the Fed, I could easily envision Tesla rallying to 300 or higher before the October 10th Robotaxi event. I do think it's pretty clear at this point as well, we're probably going to get the first Robotaxi ride that takes place. And I could only imagine if that happens, what kind of enthusiasm could build in Tesla stock. It wouldn't surprise me if Tesla made a run to new all-time highs again in October, as long as we don't get that election correction. Perhaps we got that already. Perhaps that August drop, markets can just draw that and conclude that was the election correction. Who knows? Maybe it got pulled forward a lot this year. But in this bullish scenario, you could see Tesla well into the 300s over the next couple of months. As long as the economy does well, retail sales surprise to the upside, and the Fed only cuts rates 25 basis points, which would be what the Fed would do if retail sales surprise to the upside. In that scenario, we have a very clear path for much higher prices for Tesla. In the adverse scenario, retail sales come in really bad. The Fed decides to cut 50 basis points or maybe even decides to go 25 basis points, but they sound really cautious on the economy. In that scenario, I would expect retail sales, the state of the economy, the data that we get next Tuesday to kind of turn the Fed cut into a negative event. And I think that's why retail sales is so important. Like so important. You think CPI is important? No, CPI means nothing compared to retail sales right now. And I think it all comes down to Tuesday, if you want my honest opinion, whether or not Tesla stock can rally to the 300s or higher before the Robotax event on October 10th. Because let's be honest, I don't think there's much hype or hope invested in Tesla stock around that Robotax event on October 10th. I think that you still are going to see that run up, right? If markets are good, you haven't seen that run up yet for the Robotax event. You haven't seen the hype come in yet. And I think when that happens, we can see some pretty big upside from these levels. So let me know what you think about this information down below in the comment section. Just some thoughts that I wanted to share with you, what I'm seeing right now, what I think is important right now for Tesla stock. Again, I think cash is king if you're undecided, if you don't like taking as much risk. I think you can't go wrong with cash right now. I think you will get a better buying opportunity, but it might be November, December. It might be Q1, Q2 of 2025 before we get a larger kind of crash, because I do think at the end of the day, markets are mispriced. I do think the odds of a recession are 50, 60% over the next year, and markets have those odds at 0%. We're mispriced. When markets are mispriced, we tend to correct and price more accurately, right? To price more accurately would mean we'd have to price in like a 50% chance of a recession. And that would mean a lot of downside, okay? So I think eventually that will happen, but in the near term, if retail sales come in good, I don't see that happening at least for the next couple of years. And I have, in all fairness, talked about this for weeks on the channel. I'm really not concerned about the economic data that's coming out in September, because I think we're seeing data points from the economy in May, June, July, right? Very lagged data we're actually getting. I think the economy in real time is a lot worse than the data that we're seeing. And that's why by the end of this year, I would be a little bit more concerned about a weakening economy and that whole recession argument coming about more on Wall Street. So let me know what you think about this information down below in the comment section. Tesla stock looks beautiful. I think big tech is egregiously mispriced as well, especially heading into the first cutting cycle. That's like the last place I would want to be. So just be careful. And I think if you're undecided on this, cash makes a lot of sense right now. So thank you guys for watching. Enjoy the rest of your day, and I will see you in the next one.